Welcome everyone, this is John Shealy at Traders Country Club, and we're going to take the Forex Currencies annual review for 2015, but of course we have to look at our disclosures. There's a high degree of risk in trading of all the commodities as well as Forex currencies, and Forex trading is not suitable for all investors. And be sure to remember the hypothetical results disclaimer that is on our webpage. We're going to start with the euro dollar. Let's take a look at the year of 2015. And as you can tell in the January, February, actually March, we had a very strong bearish trend. We've had a bearish trend for some time. And you're going to notice that because the bars are red. That means that there's a bearish trend. We'll talk about all the different colors as well. But in this particular case, you can say that in January and February, it was a huge decline. And if you were following the bearish trend, looking for this particular price action, you're going to have done well in January, February, and March. We'll talk about the flat market basically in May through almost October in just a bit. But here, your first 3 months of the year, you did great. Now, these little blue dots that you're seeing in the chart, remember, this is measuring a certain distance from the lows in regards the rally above these lows in regard to terms of average true range. When you see these little blue dots, that means that we're going to project that we're going to look for a decline, a return to the bearish trend within a few days. And you can see in March this is exactly what occurred. So statistically it was correct. Now next we had in early April. All of these trends that you see here, you were able to make money because of what? Because you took profits. That's important. We do not put on a position and forget it. Instead, we're looking for a position of anywhere from 2 to 4 or 5 average true range from your entry level in regards to making a profit. Now, we normally scale out of our exits. And this is how we keep our equity curve in the right direction. Now, the white bars that you're talking about, there's two events in regards to this particular code, and it's basically looking for a breakout of previous resistance, and that's what you're seeing here in regards to April. So this is coming through, and we're breaking through the highs of March and early part of April. And so you can see it's actually done quite well in regards to this breakout. The next color that you're seeing right here is determined upon the bullish trend. We have two different clears, and basically we're turning this into a change from a bear trend to a breakout to a bullish trend. But remember, based upon all our research and our coursework, where do new trends tend to basically fail or stall? Where? 2 to 4 average true range above the moving average. And that doesn't make any difference if it's a 40 period moving average or a 50 period moving average. So in regards to your play, in regards to late April, early May, all you had to do is to always remember this, that if you did take a long position, what are you going to do? You're going to take profits as we get above 2 to 4 average true range. In this particular case, we had a very large correction, and that's what this red dot is. In this particular case, it's measuring how high this is fall from the highs to a certain distance in regards to average true range. The red dots in this particular case applies for a bull market. What do prices normally do? Within 1 to 3 days, you're going to see an attempt to return to a bull trend, and you can see that occurred here. That was basically in the middle of May. Again, we needed to take profits because that's how we needed for several months now, because if you had not taken profits during these rallies, you would have made nothing. In fact, you could have easily had some losses. Now, in this particular case, we actually had moved sideways quite some time. Now we're seeing a white bar, You're seeing another one here. This white bar at times occurs, it's either going to break out of previous resistance or support, or what? The market is uncertain. If the trend is uncertain, you're going to see white bars, and that's what's beginning to occur. And you can probably look at the price action to see that that's exactly what's happening here. This market is beginning to move sideways, and it's beginning more and more difficult to analyze the price trend. Now, the next color that you're taking a look is a dark brown. In this particular case, it's basically a, quote, potential bearish trend. So we would be looking for a decline in the bearish trend. But we're underneath the moving average. So where do the prices begin to bounce in their first rally? Here, it's between 2 and 4 average true range, underneath the moving average this time. So this is why in this particular case we are turning from potential bearish to a real bearish trend. But again, you had to have taken partial profits, and this particular case is because it's underneath the moving average, underneath the price action of either 2 to 4 average true range. Now, this would have been very easy to have some losses. Very easy. The reason being is the market's moving sideways. And so every time you think the market is about to have either a bullish trend or bearish trend, it has been reversed. So we'll just watch this price action. Again, you would be able to, quote, survive in a flat market in this particular case. Here again, the white bars means watch for a potential breakout. In this particular case, a break of previous resistance. In this particular case, again, it declined, but not much. The white bars basically confirm the breakouts. You can see here a huge rally that occurred in, August. But where did we take partial profits? Between 2 and 4 average true range. Again, everything is based upon statistics here. And it's only because this is a relatively, quote, new, older bull trend here that is just basically hasn't really set up in regards to a long-term trade in regards to the weekly. So in this particular case, again, we had potential trades, but you had to take partial profits. The white bars in this particular case, you're noticing a bunch of white bars in which there's no breakouts here. And that's because the trend is getting very uncertain. So that's what this white bars mean in this particular area here. Remember, it occurs on 2 occasions. We then begin to turn into a bullish trend. Again, there's more information, a little more in price action that we can say, okay, we think it is a bull trend. Again, you would do fine if you did what? Make sure you take partial profits. That means that once you've taken partial profits of a certain distance, you can use a break-even stop or narrow your sell stop. So that's how, again, you would be able to, quote, survive a flat market. In this particular case, you're looking at October. We have the white bars to indicate a break of, quote, in this particular case, support. Sure enough, here it comes. We're turning into these now potential bearish trend. In this particular case, we turn into a bearish trend, but it's rather kind of a very small little bearish trends here, aren't there? Now, what you're looking at in this particular case, we haven't really looked at it too much, and that is the trend momentum indicator. Now, notice what's happened here. You're looking at, quote, new shorts, but take a look at the bearish trend is doing what? It's losing its momentum. Right here we're taking a look at new lows, but take a look at the histogram. It's actually above the zero. It's beginning to get what? Bullish in the blue color. That is the change of what's going on in regards to momentum. You would have been able to avoid any loss in regards to this huge rally that occurred in late December, or exactly early December. Now in this particular case, the blue dots right here mean what? We are rallying above a certain size in regards to the average true range from the lows. And we expected what? A decline within 1 to 3 days. And it actually occurred right here. But what? It was very, very short. Instead, we set new highs in the price action above the moving average. Remember the book that I let everyone have? The book was called Common Sense Technical Analysis, and it looks at certain price actions that tends to occur again and again and again. Where is it? It was actually the first resistance from a trend is where? The MCI. That is basically these large corrections based upon average true range. What's the next area that you're going to see notice normal resistance? It is what? The moving average is also going to be resistance. And in a particular case, it can be support, but in this particular case, it's resistance. And sure enough, that's exactly what began to occur in the price action in the middle of December. As we end the week of December, you're beginning to get these little blue bars. These are basically, quote, potential bullish trends. We're not quite there yet because notice we're beginning to get white bars again, so it gets uncertain. So here's how we're going to look at the price action in the first week of January 2016. If price action begins to move higher next week, immediately, then we're going to look at the potential of a, quote, new bullish trend. New in the sense of it's relatively holding above the moving average. If the moving average, if the price action above the moving average begins to rally, then we'll actually be watching for a potential bullish trend sometimes in 2016. But where? Where is it then going to have a problem in regards to any rally that may occur? That's going to be between 2 and 4 average true range. So we'll watch the price action. Instead, if it sells off, gets back underneath the moving average, I get the white bars, and get rid of any bullish notion of the price action, then we'll start over. But we'll take a watch of the price action in the first and second week of January in 2016. So here's the euro. We're taking a look. You had a decent ability to be, quote, positive for the year. Now, it wasn't going to be very easily. This was not a good year for actually hardly trading of any trading for stock indexes, as even some currencies didn't do particularly well. Only if what? You had to take partial profits. You're taking a look that if you didn't take profits and you tried to hold up the big winner, guess what? You didn't make any money almost all of the year of 2015. Let's take a look at a few other currencies, and we'll then put it in the context of the colored bars that we created. All right, now we're taking a look at the pound dollar. The bearish trend occurred in late 2014. January, again, the market was very oversold. And remember, in all of our charts here, we're saying 2 and 4 average true range above and below the moving average. We have talked about where does extreme trends occur for a reversal, and that is anywhere between almost 6 average true range above or below the moving average. So you can see in this particular case it was the bearish trend was doing well. Let's take a look at the price action, however, in February. We had, again, the blue dots, and this particular case means what? Within 1 to 3 days, you're going to see a, quote, return, attempt to return, that is, at the bearish trend. That's exactly what occurred there. But this time, the bars stayed blue. That becomes a potential new bullish trend. So in other words, you can put a long position on once we begin to price move back above the previous high of the previous day. But do we just hold the position forever? No. Where do we put profits? We already discussed this. This is a relatively new trend. So where is the first problem that this price action may move up? It is because it's 2 average true range above the moving average. So where did it stop? You got it. right there. You had to have taken partial profits. We didn't know it was going to have a decline like this. So the only way to survive through this and actually make something in this is take partial profits above 2 and 4 average true range. In this particular case, it occurred just above 2. You can put in break-even stops, and that's exactly what could have occurred. The white bars that we see is a break above, in this particular case, the previous support. So you could have indeed actually traded a short position. The color of the dark brown, that basically indicates a new bearish trend, and that's exactly occurred here. Here's the blue dots again. Return to a bearish trend, return to a bearish trend. This time in April, we have now white bars. We're breaking previous resistance, and you see the trade here. Where do we take partial profits? In this area. We're beginning to get kind of confused because the trend is not exactly certain here, but we've turned into these. Here we're taking a look at the cyan colors to indicate a bullish trend, and you can tell the larger correction setting up opportunities. Here's the red dots that indicates a large correction from the highs. We're going to begin to, quote, return to a bull trend, and you can see that occurred here. Here we're looking at July and August. Very difficult. This would have had indeed had a bearish trend, bullish trend back and forth, and you would have losses here. This was actually going to return your return in regards to equity is not going to do particularly well. Again, this was very, very difficult in regards to the May, June, and July. Let's take a look at the second part of the year. And in this particular case, you can see we've had a large number of rallies, but from what? We're basically seeing a large rally, but the trend is turning. It's turning into a bearish trend, and it was relatively surprised. Here's the blue dot. Remember, that means it's a large rally above the lows within 1 to 3 days, and you can see here it is in regards to the potential return to the bearish trend. Here's some other bars right in here. Now this is becoming blue because it is making an attempt to turn into a bullish trend, and it turns into a loss. So we would have done all right here in regards to having a good profit. In regards to September, October would have taken our money away. But take a look at basically November, December. The trend has done bearish. We've had some nice corrections here. Every one of these swing trades would have done well. So we're taking a look at the British pound. It has been a rough year, but take a look at the total price action for all of 2015. You would have been able to make money for the year. Believe me, some large funds did not do well at all. But in this particular case, because we had partial profits, we would have been able to survive, especially the last 6 months. Let's take a look at a few other currencies. Here we're taking a look at the Australian dollar. Again, the dollar, that is the US dollar, was very, very strong against all the currencies in late 2014, early 2015. So you've done very well. I'm just going to briefly go through this. The blue dots indicate return to the trend. We saw it. Blue trend. Here's the blue dots to indicate that we're going to see a decline, a quote potential return to bearish trend. We see it. Here we have the blue color to indicate a quote potential bullish trend. In this particular case, where did it stop between 2004 before 2 and 4 average true range? We had a correction. It's now turning into the color of a bullish trend, but again, we had to have taken partial profits, or it just completely reversed. This moved into a bearish trend in June, so you would have been able to basically have a nice little profit here in July and August. Here we actually had a rally in September, and sure enough, it returned to the bearish trend. Now the last, early August had a flat price action of which you'd been able to make a nice profit here, but it was a good thing because October and November and actually partial of December, turned out to a big loser. And the reason being is every time we had a potential setup for a bull trend, even at 2 average true range above the moving average, it just wouldn't hold. And so we had very poor price action here. We've turned into bullish trend. You would have to make very, very quick profit targets, which is normally relatively too small. But in this particular case, if you were able to watch the market very closely, you'd have been able to, quote, survive, which is basically what you've done for the 2015. You've survived the price action over the last year. All right, again, let's talk about the 2016. And you can see the bullish colors that's occurring, the bars. This is, quote, returning into a potential bullish trend. And that's what is occurring here. Right now, it's actually holding a long position at this particular case, but would take partial profits and probably somewhere above 74, 75. Right in this area here, we're going to take some partial profits here. Again, if it just crashes down, then we'll start over. Let's take a look at a few other currencies. Quickly, I just want to take a look at the dollar Canadian. And the reason we're taking it, you know what's happening to the crude oil market. What's happening? It's collapsing. Well, what does crude oil collapse? Basically, what currency affects not just the dollar, what? It's the Canadian dollar. And sure, that's what you're seeing. The big rally that you've seen for basically the weekly trend in regards to the dollar CAD is because of that weakness in the Canadian dollar. Here, that's what you're seeing, the potential price action in January and February in 2015. We had corrections, but again, you were indicated, you're basically able to watch this correction that occurred. But as you can tell by this color, you're taking a look at the new bullish trend, and again, it's all involved with the crude oil. We had another basically correction in this particular case, and again, where between 2 and 4 average true range, so we already kind of knew that that was possible. But the crude oil began to fall again, set new lows, and that's what you're seeing in regards to November and December. So you can see the dollar Canadian has gone up very high. Is it possible that this continues? It can, but to tell you the truth, I want you to watch very closely two things. I need you to watch the crude oil and natural gas, as well as the gasoline in the first month of the year 2016. If you're going to see a correction and basically a rally in the crude oil, it's very possible that the dollar yen, not the dollar yen, the dollar Canadian is going to have a larger correction in the first month of January. So we're just going to watch that. Depends upon what is the price action doing in regards to crude oil. But at this particular case, it's still bullish, but we're going to watch this to see if we're going to have a larger correction. Well, welcome everyone. I hope you enjoyed the review for several currencies here. I hope you had a great year in 2015, and we certainly hope that we get some better trends in 2016. This is John Sheely at Traders Country Club.